If you've ever wondered why price moves just before you enter and never comes back, that's because you are entering where retail does, not where smart money does. Let me show you exactly how smart money enters trades and how you can flip the script starting today. Most traders enters at a support, resistance, or even a breakout level. But what really happens is smart money uses these zones to trap liquidity. You enter, they reverse. You panic, they profit. In this trade, you can see where the retail trader placed his stop loss, right? At this zone, knowing full well that there are liquidity gathering at this place. There was like a series of liquidity resting here, and the smart money boys, like I said in my previous videos, they are attracted to these zones. Your stop loss, the liquidity, okay, they are attracted to the support and resistance, the breakouts, okay, because when market is consolidating, when market is giving out equal highs or lows or equal lows, the smart boys are so sensitive and interested. Smart money doesn't chase, they wait for 3 things, which is the inducement, the mitigation, and the confirmation. Firstly, the inducement. Price tempts retail traders in. It tempts you in by leaving out a liquidity. A liquidity behind, leaving out an inducement to be taken out. And as a retail trader, you would think that it's an order block. Now what then happen? The smart boys comes in, they come into the market, and what do? They take you out, and they reverse the price downwards. So this is all about the inducement. It's there to tempt retail traders to go in early. Now we have the mitigation. As a smart boy, as a smart big boy, you tend to set out your order block close to your inducement level, close to your structural liquidity. Inducement, structural liquidity, they are the same, because price always leaves out an inducement. That inducement is what tempts the retail traders in, the early buyers or the early sellers. Now we are talking about the mitigation. After the smart boys have seen an inducement, here is an inducement, what then happens? They mark out their order block here. Okay, after marking their order block, what are they expecting? They're expecting to take the trade. They're expecting to take that trade instantly, setting their stop loss above the block, and setting their TP to the nearest liquidity. Whereas the retail traders have set their SL at the first block that they saw. I'm coming, pardon me. At the first block they saw, right? So what happened? The smart boys, they come in and take the early sellers out, or the early buyers, or however the case is, but we're talking about the selling phase. So they take out the retail traders out, and push the price downwards. You can see it now. Now the third is the confirmation. They enter with precision. They don't just enter with doubt, they enter with precision. Let's see this in a real chart example. Here's an example in the price chart. Now notice how price forms a block. That's inducement. Look at the block I'm talking about. This is the block, right? This is the block. It is what? An inducement. Retailers have placed their what? Their stop losses just below this block, because they think that since price must have already created just a break of structure, they can go into the market just because they trade solely on just SMC and not the pure SMC strategy. Now, we deal on what? The advanced SMC strategy. We think like the smart boys. Now, what does the smart boys leave? Like, what does the price itself, what does the price create? That's what the smart boys always think about. Now, firstly, we said that what? The price will always create some sort of inducements, right? Some sort of liquidity to fuel what? To fuel the price movements. And now, if you want to consider your block valid, you don't just rely on what? One confirmation. As a retail trader, as a retail trader, they just depend on one confirmation on this trade. They just depend what? On this other block, right? Just because they saw a break of structure and they saw an other block, they said, okay, let's go in. No, you don't depend on just one confirmation, okay? You don't depend on one. Now, as what? As a smart big boy, what do? You depend what? Solely on three different criterias, right? Three different criterias. One is what? A liquidity sweep. Two is what? A shift in structure. And the what? And the third one is what? A structural liquidity or an inducement left out. We said that what? An inducement is what? When price tempts what? The retail traders in. Now, how does price tempt the retail trader? Let me go back again. You can see now that price is tempting the retail traders, and what? The price eventually what? Took them out. The banks took them out. The smart boys took them out, right? And now, thinking as a smart boy, why you want to take this trade? I told you, think of three things. As you can see what? A liquidity sweep here, followed by what? A break of structure, followed by what? A liquidity or a structural liquidity. Then what? An order block. Guys, a shift in structure. You can go dive into the lower time frame to get that. This is not a structure shift. Okay. So now, a shift in structure, change of character. That's what I mean, right? A change of character. You dive into the lower time frame, right? I didn't say this is not really part of it, okay? But the main criteria, okay? You must have what? A liquidity sweep, shift in structure. You can dive into the lower time frame to get your change of character. Then what? An inducement, and what? The right order block. Okay? The right order block to use, not just another block, not just because it has swept liquidity and you felt that, okay, let me just draw another block. No, let me just mark out another block. No. Your other block should come what? With what? A displacement. Like, it should come what? With a speed. Like an imbalance, right? And close to your other block, you should please always have what? An inducement, a structural liquidity. Because it's that inducement that is attracting what? The banks, attracting price to this your zone. I explained in my previous videos I made. Okay? So it's this liquidity that attracts. This is the liquidity. Okay, yeah, this liquidity attracts the price there. It attracts the price to what? Your block. And now, retail traders took this position and what? They placed their stop loss just below what? They placed it below this what? This block, right? They placed it below this block. I'm just trading the retail perspective. So they placed it there and they ended what? Getting stopped out. Now, as a smart boy, what did you do? You patiently waited for this trade, right? You patiently waited for the trade. You were not tempted. You were not feeling buzzy, or you were just on a high level. You were just pretty much cocky while taking this trade, right? You were just cocky, right? Why were you cocky? Because what? You've got all the confirmation you need. Like, you just needed to just go in with precision, without fear, right? Without panic. Are you feeling me? So that's just how it is. You don't need to panic while taking trades. Okay? It's that easy. Just know this. Just have what? A liquidity sweep. Very, very important. Because once that area has been swept like this, it has formed a protected what? Low. Or a protected area, because this area can't just come back here and be taken out again. Why? Because price has taken it. How can price take out something and price is coming back to take out some other thing? No, it doesn't work that way. So if this area has been swept, that's why we look at the three criteria. Okay, so now have a liquidity sweep, have what? Have a shift in structure, have a what? Have a structural liquidity left behind, or an inducement, which is what? The inducement is the retail traders. So have those left behind. Then what? Mark out your right order block. Okay, so don't become the retail traders. Okay, just try trading like smartly. Trade with what? Confirmations. What? Confluence. That will boosting up your precision in market, right? So that's how you trade. It's that easy. So whenever you see a support or resistance, or a block itself, it's a zone, ask yourself, is this an inducement? Okay, is this an inducement? Now, before taking a trade, before like going into that trade, make sure that what you've received, what? A structure break, and what? A mitigation. Please listen. Before you take that trade, make sure that you what? Receive a structure break and a mitigation, because that's where smart money is. Okay, that's where the smart money is. Now, structure break in the sense that you wait for what? Price will come what? Take out the early buyers here. That's what we call them, the retailers. You wait for them to come and take out the what? The early what? Buyers here. Okay, that's number one checked, right? Good. We've gotten what? A sweep of liquidity, right? Automatically, it's what? It's called a sweep of liquidity. Okay, that's what? Structure break. Waiting for what? Price to come take out what? The early what? Buyers or sellers. Okay, because they are retailers that marked here as their block that they want to buy from, right? They want to buy from here, and what? They got stopped out eventually. So what? You need to think hard. Like, don't think hard, like just think smart, right? What are you waiting for first? We are waiting for a structure break. We are waiting for price to just come and take out that inducement level, to come and take out where liquidity, or where retailers have what? Where retailers have what? Marked their support or resistance from. Because here now, they marked here as their support. Their support, if you go to the lower time frame, you can see it clearly. Okay, so we need to think, where have they marked as their zone, or their support, or their resistance? If this helped you rethink your trading entries, don't just leave yet. Subscribe, turn on notifications, and join the BFX Trading Academy for more breakdowns like this.